We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the S&P 500 index, doing a complete transition again from the rip area to the dip area. We had talked about how we were in a rip area yesterday and where we were at on the inflow versus outflow. And within today's volatility, our SPY bot sent out a bear indicator at 1:15 p.m. and outflows had already crossed. They rejected again the midpoint to the downside, dominated by outflows and pure weakness there on 42 vision, and put options went up 100% plus within an hour, guys. If you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors using these resources to maximize in either direction, whether stocks are going up or going down, by receiving this clarity and edge over the charts. So here we are with the SPY, as I stated, doing a full transition from the rip area to the dip area. We're looking at it now, fighting here to stay above 390, rejecting again towards the resistance of 398 and 395. We're going to break it all down in today's video, but before we do, I want to share with you guys the home run opportunities that were mentioned this morning over at the Discord. So the home runs of the day were spectacular and beyond expectations, and if you guys want to know about these stocks early on in the pre-market and receive this clarity and edge over the charts, check out the link down below in the description to the Discord, and by joining, you'll become part of a growing community of investors all looking to learn and grow together. So the first home run was from our Tesla bot. Our Tesla bot sent out a bull indicator at 9:35 a.m. and from that moment forward, the inflows crossed the midpoint to the upside, full strength there on 42 vision, and call options went up 300% plus within an hour, guys. Our second home run, we caught this one in the pre-market sitting sideways, and we were looking for this one to pick up with inflows, and they stayed above the midpoint, switched from red to green, full strength there on 42 vision, and hit a highest point of 90% plus, guys. If you guys want to receive this clarity and edge of the charts and know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, the S&P 500 index. It's been pretty volatile the last several days, and it's done a complete transition again, as I stated earlier, from the rip area to the dip area, right? We went ahead and we went into a dip area back here on December 6th and the 7th. We found strength here, and yesterday and today we hit the rip areas, and today a full transition has happened on the 30-minute. If it's your first time coming across the channel, 42 vision allows us to see the dips to the rips and the rips to the dips. And then from there, we also use our bull and bear indicators and inflow versus outflow as an extra layer of confirmation, which I'm going to pull up here and you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to the bots and becoming part of a growing community of investors all looking to learn and grow together by using these resources to maximize in either direction, whether stocks are going up or going down. And in today's video, I'm going to pull up here the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we are with the SPY under a bear indicator from way up here at 397. It kept on trying to fight and stay above 395, and that's where the big rejection happened here towards the end of the day and fell all the way down into the after hours of 392, and even right before the bell there, which is at 1:15, where our SPY bot sent out that bear indicator, and from that moment forward there was weakness towards the end of the day, and outflows here on the 30-minute crossed over as well and began since the middle of the day here. Once it crossed over, that's when things started to get much more significant. So now we're back below the midpoint as the bulls were fighting to bring this back up. It was under a bull indicator for 2 days straight, and in yesterday's video I talked about how we did a full transition so far from the dip to the rip, and if we continue to break out, we needed to watch how it reacted above 397 to 400 and how strong those inflows could be. For most of the day though, it was fighting back and forth, but there's a lot of weakness in the overall chart because the overall direction, if you just draw a channel here, was downward, right? And here we are after a full transition on the 30-minute, hitting a new dip area here of trying to find support in the same spot of where things dipped in the pre-market. The question mark is, will it test 390 or will it find strength here again? Because here we are with that double bottom effect, right, that we were looking for to bounce back up, and it rejected right below 400. And I've talked about how important 400 is as a psychological level, where a lot of people are speculating that once we're above it, the bulls have control over the chart on the SPY, anything above 400, and then below it, the bears are dominating. And you could see it here, the tug of war, the back and forth, and the extreme volatility that we're in. And I've been talking about this all year. This is my opinion, not financial advice, just my perspective alone. And I could be completely wrong about this, but volatility is here to stay. And within the volatility, what I'm trying to do personally is maximize within those moves, because plenty of opportunities daily, in my opinion. Again, not financial advice. So here we are under a bear indicator after the PMI data. And I talked about in yesterday's video as well. And I stated these words. I stated this could make or break this rally, this data. Either it's going to give it the boost to go higher and retest 400 and try to break above it, or it's going to reject it and bring it back down towards 390. And here we are pulling back down within this volatility after those numbers, because the numbers were not looking so great and the markets are overreacting every single time data comes out that cancels out what had happened here. Right back here on November 30th, you could see those inflows, how strong they were. They crossed over, got that bull indicator, and the markets went up from 394 to 408 because of the fact that the Fed and Jay Powell reassured the markets, right, by stating that they're going to go ahead and slow down the rate of hikes. Now, instead of 0.75, they're thinking of doing 0.5. That's not guaranteed, right, because all this data that's coming out now is creating that uncertainty and doubt and shaking things up, because the reason why we've been falling back down and today we had volatility again is because of these data points that keep on making the market trying to price in the possibility of another huge rate hike, or the Fed having to do more work than we anticipated. And even themselves, they anticipated after this data here that has been coming out. We need to see how CPI comes out, and it could all cancel out this. And right now, none of these data points, if you really look at the whole entire chart, have completely shocked the markets to the point that we're going down to even newer lows. Because if you think about it, the market's been fighting right around the same area ever since Jay Powell spoke, and nothing has really shocked it enough to bring it all the way down here. But something like CPI or the Fed coming out and stating, hey, you know what we stated back here on November 30th, I think we may be wrong, that's going to further accelerate volatility to the downside and even to the sideways action like we see it right now, right? This has been a back and forth. It doesn't really go up. It's not really going down. But here you could see it, that we got that bull indicator on the 7th. Inflows crossed over. It went over from 392 to 397. Sideways action. Inflows picked back up here. And from yesterday to today, it hit highs here in the pre-market of 398. But very weak. And today it was very volatile. But the overall direction down based off the 30-minute with that bear indicator and inflow slowing down. And the moment outflow started to pick up and they crossed was right here in the middle of the day, rejecting 397, trying to find support at 395 and just falling down within minutes to an hour to 392, guys. And you could see it here also on a much more volatile scale on the 5-minute chart, how it all happened. That was that bear indicator from 1:15 p.m. and then things started to fall slowly, and then they collapsed, right? Because it lost momentum, rejected there on those outflows. And same thing with the 15-minute. As you can see here, it got that bear indicator towards the end of the day, and outflows had crossed in the middle of the day, guys. And we're watching this very carefully here, because so far on multiple time frames, as you see this, we hit a rip area and we're in a dip area again. So it could try to reverse back up, a dead cat bounce or momentum, but it's going to be significantly important to watch how the inflows versus outflows are reacting as well at these areas. Now, the 1 hour, you could see here, it just got a bear indicator today, canceling out that bull indicator from 394 to 395, right around that 396 area. and the outflows crossed over, guys. The last time outflows crossed over significantly like today, hitting minus 4.02, was way back here on December 5th. And when it started pulling back down, it went ahead and fell from 404 all the way down to 398. So something to not overlook. And it was followed by a bear indicator there. We have the bear indicator here, and outflows are falling significantly lower than yesterday's, right? Some outflows were there around minus 1.89, but right now we're at minus 4.02. I'm going to be watching this going into next week. This is crucial. This is critical because the more it fights to stay above 390 and the more it struggles to pull away from it, the higher the chances is coming to break through it and even hit newer lows of supports that we have not seen, which is 385, 384, and all the way down to 380. Within that area, it's going to be significant for the bulls to come back up. If not, the bears are going to try to take over, guys. And each day, there's going to be volatility like we see it right now, and there's going to be opportunities, in my opinion, my perspective alone, not financial advice. But here we are, outflows crossed on multiple time frames. I'm going to be watching on Monday if these inflows could pick back up, not just on the 30-minute, but also on the 15-minute here. We want to get back above the midpoint, cancel out those bear indicators, and start getting bull indicators. And if we can go ahead and start the transitions back up away from this dip area towards dark green or bright green bars, guys. The first support below this, which is 392, I've talked about it, is 390. Below that, 387 to 385. And to the upside, I'm going to be watching 395 again. Since we're back below it, it's going to be pivotal and significant. And then above that, 398 to 400. I look forward to seeing your thoughts down below. And as always, guys, thank you guys so much for watching. And let's make some money.